funsupermart.com.
Hello everyone. While China is going through a shift of focus from exports to consumption, Chinese consumer market is set to outperform this year. Today we have Marvin, the investment manager at BOCI-Prudential, to share his view on this investment case. Hello Marvin. What are the catalysts for Chinese consumption markets in the next 1 to 2 years?
Well, actually, I myself believe that the long-term story of the Chinese consumer story, simply because the consumption rate in a typical Chinese household is just too low. What is the implication of this is that there's twofold actually. First of all, the pro-consumption policy from China will probably continue in the medium term. And secondly, the room for expansion in the consumption side is actually huge. All right, under the current scenario, the current slowdown in the developed economies, the export sector in China will probably be negatively affected. Therefore, the Chinese government has to come up with something to compensate for this. And I believe that the consumption sector is the perfect sector to compensate the slowdown, the possible slowdown in export demand. Therefore, I would say the continued policy from China to support consumption will be the major catalyst for the sector in the coming 1 or 2 years, be it the minimum wage increase or to provide better retirement protection, the social security network, everything that all will probably increase the propensity to consume of a general Chinese household. So that will be the catalyst, I believe, for the coming 1 to 2 years.
So far, China's GDP growth in 2012 has disappointed the markets. So what are the implications to consumption stocks investments?
Put it positively, the Chinese government did not just sit there and look at those numbers. They actually step in. For example, the Chinese government cut the RRR rate. They announced new pro-consumer policies. They cut interest rate. And they speeded up the approval of infrastructure projects. And actually, the reason loan growth or the new loan numbers tell us that now the government has shifting from a relatively tight policy to a relatively pro-growth policy. All right, adding all these together, I would believe that the GDP growth, the headline GDP growth in the second half of this year could be 1 to 1.5 percentage point higher than the first half this year. So remember that starting from 2010, the quarterly GDP growth of China is actually going through a downward trend. And now we hit 8.1% in first quarter and probably a little bit lower in the second quarter. So if there is any bottoming out sign during the second half of this year, this will probably be quite positive for the investment sentiment as a whole. So this is not restricted to consumption, but for the whole market sentiment.
Is the sector attractive from the valuations and earnings perspective?
Well, valuation-wise, I would say the consumer stocks during the past 6 to 12 months is undergoing a consolidation stage. All right. While on a relative basis to the market, if our macro outlook turns out to be correct, which means that second quarter marked the lowest point, and then we have some bottoming out sign during the second half, which means that the downside risk for profits is actually quite limited. So valuation comes down while the risk for earnings is actually stabilizing. I would say the valuation for the consumer sector as a whole is actually relatively more attractive than 6 to 12 months before.
Lastly, what are some of the important themes of Chinese consumption investments?
Well, I got 3 ideas here. The first of all is the consumer staples. Because against the backdrop of the slowdown in the global economy, a lot of commodity prices has actually peaked off and comes down quite a bit during the past 9 months, I guess. So consumer staples, they got very stable demand, and lower commodity prices actually would boost the gross margin, their margin. So that would directly benefit their profitability. This is number one. And number two is simply the sectors which will benefit from government's pro-consumer policy. This is self-explanatory. I don't want to spend time on it. And the third thing is actually those sectoral companies which have a better footprint in the lower tier cities. Why is that? Because I do believe that over the long run, you cannot just rely on those first tier cities in terms of consumption growth. And after decades of development in the coastal areas, the consumption growth in the coastal areas is actually hitting some, I won't say it's peaking, but actually the acceleration in growth will probably slow down. Okay, so the main driver will probably shift from the coastal areas to the lower tier cities or to the central or western provinces in China. So I would pay more attention to company with a better footprint or better distribution network or better products tailor-made for the inner cities people. So that will be the major direction for the Chinese consumer sector.